What's up everybody, Nate here. And the housing market in the United States has pretty much gone off the rails over the last couple of years. Housing unaffordability has reached an all-time high, meanwhile supply of homes and demand has also fluctuated like crazy. But this time, the crisis we're facing here at home is also an issue all across the world, as the UK, Canada, and China are also facing similar problems. And all of these issues are sort of culminating into one of the largest global housing market collapses that we have pretty much ever seen. So today I want to talk about why this is all going down right now, and I want to talk about how this could all potentially affect you and your money. So let's start with the UK. Now the UK's housing market is completely set up differently than the United States, especially when it comes to mortgage lengths. In the United States, it's pretty common to see people with either a 15-year mortgage or a 30-year mortgage, and that can come with a fixed rate or an adjustable rate. But in the UK, the mortgage lengths are a whole lot shorter. The average mortgage length in the UK is around 2 to 5 years, and that is a big deal considering the short-term consequences of our economy and actions from central banks. Central banks all throughout the world have been raising their interest rates, like the Federal Reserve and the Bank of England, and that means it's a whole lot harder for consumers and businesses to borrow money. So the big issue right now in the UK is a lot of those mortgages are starting to reset, and 2 or 5 years ago, mortgage interest rates weren't super high, but now for people to stay in their homes, they're going to have to get a new mortgage with a higher interest rate. Whether it's fixed or adjustable doesn't really matter. A lot of people living in the UK are facing much higher prices than they were before because inventory in the country is also super low and interest rates are a whole lot higher. So it's going to be a lot more difficult for people to get a mortgage, and that means that people are simply going to get priced out of the market and they're not going to be able to buy up homes. Eventually that could lead to prices going down because demand has gone down so significantly and also prices starting to drop. And we simply don't know how long that's going to last for because interest rates could ultimately stay high in the country for a very long time because pretty much everywhere across the world is facing really high inflation, which is the reason for interest rates going up super high in the first place. If we kind of switch over to China now, China has been having a real estate issue and a housing issue for the better half of the last 10 years or so. Mortgage issues in China really started to take off though in 2021 and in 2022 because a lot of citizens in the country were pretty much fed up about how mortgage companies were running their deals. Basically in China, the way that mortgage systems work is that you actually prepay into your mortgage before a home is built or before you actually have the house in your possession. So before you actually even move in, before the house is even built, you're going to have to start paying your mortgage back. But the issue was a lot of these mortgage companies in China were taking the money and basically running. They were not building houses, or they were so far behind building houses that people in the country were paying a mortgage on a house that they may never actually live in. That caused a lot of citizens in the country to actually protest banks and protest mortgages. A lot of people were actually protesting by not even paying their mortgage at all, which sort of created a small collapse in the real estate sector. Another big thing that's been going on in China is that the country has been experiencing explosive growth. So that means that a lot of people in the country have been making a lot more money at their jobs, which means they can afford a bigger and better house. Builders in the country have been sort of producing homes based on that demand, so housing prices have gone way up. But now that we are facing issues related to the pandemic, related to inflation, and just the economy slowing down in general, with a lot of big companies pulling their manufacturing out of the country, well, that means that people don't have as much money as they used to in China. So the country had this big growth, but it sort of grew way too quickly because now people can't afford homes anymore and there's an abundance of supply on the market. Now, normally when you have a lot of these different issues with sort of mortgage companies and real estate companies going into default, sometimes the government would come out and backstop or bail out a lot of these companies so that way they can continue to stimulate the market. But China isn't in the best position to do so because of global debt. Because interest rates have been rising pretty steadily, well, that means that investment prices are also going up. That means the return on investments for a lot of different companies and countries included is going down. And some other countries have not been able to recoup those costs, like Sri Lanka. Sri Lanka actually went into default on a lot of its debt, and other countries like Pakistan are very close. China has done a lot of deals with these countries, so they have loaned billions of dollars over to Sri Lanka in order to help that country grow. But the problem is with Sri Lanka now defaulting, China isn't going to get those dollars back, which means if China wanted to sort of stimulate the economy, well, then it would have to print a lot more money very quickly, but that would simply just cause inflation and it would hurt the long-term success of its economy. So it's not really looking at that as a viable option right now, and it's trying to do what it can with its own interest interest rates and its own government incentivized programs to get builders to create more homes and to get people to go out and buy more homes. And then we have Canada and the United States. Now, Canada's issues are very similar to what we're facing here at home. Canada has a supply problems with their housing, which is causing big issues in renting because people are being pushed into the rental market, and it's causing a lot of issues with housing prices. Basically, homes in Canada are completely unaffordable and loan terms are a lot shorter than they are here in the United States. So it's a similar issue to what is going on with the UK. A lot of people are about to have their mortgage rates reset. Meanwhile, the Central Bank of Canada has been raising their rates in order to fight inflation. So they have not enough homes, and because demand has still been high for homes for people who have money, prices have continued to go up. So unaffordable homes, not enough homes, and then they have really high interest rate. That is sort of creating the perfect storm for a potential housing market crash. So now what exactly does this all mean? Well, houses are a big portion of the economy and a big portion of a country's GDP. If you start to see interest rates go up and you start to see housing prices continue to rise and unaffordability get way out of control, well, that means people are going to have a harder time buying homes. And if they have such a hard time buying homes, then they're probably not going to. That could create a housing market crash because there is way more supply than there is demand on the market. If defaults sort of rise because people are unable to afford their current mortgages and you have people not buying homes, well, that could trickle down into every other aspect of the economy. Everybody that buys materials to build homes, everybody that works on those job sites, people who sell homes. I mean, these are entire industries that could essentially go under, not to mention Wall Street and their mortgage-backed security market. Right now, though, people in the United States and across the world are still buying homes, and they're still able to afford some homes. You got to think, here in the United States, how do people afford a home? Well, they afford a home based on the income that they get from their 9-to-5 job. But if they were to suddenly lose their 9-to-5 job, well, then that means that they're going to go into default and they're not going to be able to pay for their house. They're not going to be able to pay for their credit card. They're not going to be able to pay for the things that they need. That is obviously a terrible situation, and nobody wants to see that happen to their neighbor. Nobody wants to see that to their friend or family member. But the issue is that could potentially be the big outcome from the Federal Reserve and other central banks raising their interest rate, much higher unemployment. Basically, with our entire economy and global economy slowing down right now, well, businesses are trying to cut costs as much as possible in order to survive, and that usually means cutting salaries, i.e. people. We've already started to see big layoffs in 2023, and those could continue as the economy continues to slow down and inflation stays high, investors don't invest as much, and consumers don't spend as much. But will this crash be as bad as 2008? Well, it really just depends, and it depends how many dominoes end up falling. It's important to mention here that we may not see a housing market crash at all. Inflation has started to slow down, which means the Federal Reserve might also start to slow down its interest rate hikes. That could mean that mortgage rates stay more affordable for more people and demand continues to outpace supply. Nobody knows what's coming next for the housing market, but it's important to note here that every market will experience periods of booms and busts. Simply no market can go up forever, and that includes housing. So I can't tell you if a collapse in the housing market is coming sometime soon, but what I can tell you is that eventually we will most likely see one, and that means that you need to be prepared with your money now because nobody knows what's coming next. Let me know what you think about this global housing market collapse in the comments below. Do you think that a collapse is coming soon, or do you think that the housing market is actually going to boom in 2023 and 2024? That is it for me, everybody. Be kind out there, and I'll see you all in the next one.